Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today I'm going to go and answer a comment here. It's basically on the timing of gold and silver and what my opinion is on when we might see a launch in gold, silver, precious metals, like gold and silver basically. It says, hey Andy, I'm wondering what your thought of Gary Savage TA versus that of Michael Oliver and David Hunter. Gary has metals going lower for another year or more, while the others show relatively soon for the next leg up. Wondering what you think. Well, so what I like to do is I use ratios to obviously look at the analysis of risk reward. When I look at these risk rewards, I don't necessarily care as much on when it will happen, but more on the probability of it happening. And I know a lot of people get hung up on the when. They want it to happen right now. And if it doesn't happen right now, I'm going to sell it and put my money. It's going to be capital that could have been making money somewhere else. What I look at is I look at a wide array of different things. I say, okay, is the commodity sector, are the valuations attractive? Is the risk reward worth the, is the juice worth the squeeze? And if the answer is yes, then I start looking at, okay, when is this thing roughly going to come into play? And if you're within a year or two, I'm going to say that you're close enough where if the gains, if this juice is going to be exploding when this thing hits, and you're going to get a tidal wave of juice all over your body, it's definitely worth the squeeze then. So I don't necessarily focus on the exact timing. What I focus on is the risk reward. It's a huge asymmetric bet. And if I can squeeze out a 10x, a 20x, or 30x on some of the companies, or if it's a 5 to 10x on some of the larger companies, or the commodity itself, I'm going for it. So I can't tell you exactly the timing of it. If I were to have guessed, I would have said that we would have broken out a little bit earlier than what we have. I would have said we would have been doing it already. We would have been in an upward trajectory move in gold and silver, but obviously we're not. And I don't have that crystal ball. So I have been waiting basically at any point now. I think it's very soon. And I am surprised that it hasn't taken off yet. So I would have been probably sooner than obviously Gary Savage, or I'm probably as close or even before Michael Oliver. Because I would have thought, well, if we're getting CPI readings and high inflation readings, that the money would have already been kind of trickling over. It has, but they've done a very good job if someone's trying to control this, to control lower. And if it's not being controlled, then the money just hasn't rotated yet. And I would have thought that we would have been kind of moving up already. But I'm pretty patient. I know that the risk reward is there. I know that the ratios in terms of the gold to monetary base are at ludicrously low levels. I think that the money will rotate at some point. I don't know when, and I'm willing to ride whatever volatility between now and that point is, because I think at the end of this, the juice will be worth the squeeze. I really do think that. I have watched Michael Oliver. I don't watch David Hunter as much. I've watched a couple of clips from Gary Savage. But one guy that I think who is worth listening to that you didn't put on here is Market Sniper. Watch him. And Market Sniper, I think he has some very good points. And if anyone, I do learn stuff from him, I think. Those are the people who I kind of migrate to. I don't think I learned as much from the others. They're good, but Michael Oliver, he's got some proprietary technical analysis stuff that I haven't. It makes sense. All he's doing is he's applying things where he's looking for momentum, which makes sense. I just look at it a little bit different than he does through buying pressure on candlestick sizes and using volume. So it's probably pretty close to the same thing. He's just using a little bit more process approach, I would say, than me. But the Market Sniper has some pretty good stuff. And what is awesome is that whether it's Michael Oliver, myself, or Market Sniper, or some of these other guys, we're all coming to the same conclusions. We're looking at things from different viewpoints, from different perspectives, and we're all kind of coming to this point where it's like, yeah, this is kind of where you need to be. We're all kind of the inflation trade. We're very kind of looking at these things from different paradigms and viewpoints, and we're all coming to the same conclusion that this is cheap, this needs to go up because of X, Y, Z. And a lot of the reasonings are very similar or the same. And so, some of these other guys, I'll listen to them, and it's like they're just almost a carbon copy of myself. And one of the guys that is a carbon copy is John Paulson. John Paulson is a hedge fund manager, and he was on a Bloomberg interview, and he was talking about gold, and in an increasing inflationary environment or high inflationary environment with increasing interest rates, and he says gold's going to explode. And I'm like, thank you. Like, there's another guy that thinks the same exact way that I do. I mean, almost to the T. And I don't rely 100% on technical analysis. I almost don't even rely on it, to be honest. I do a lot of technical analysis. I think it has good entertainment value. It has good where you're trying to get an entry point. You can kind of, if you kind of understand the markets and you watch this stuff on a day-to-day basis, you know where your buy points are. So if you watch it on a day-to-day basis, you're like, well, this one's about to break. I got to buy this one next. And then you find another one, and then you don't really need to like go searching if you've got money to look. If you've already got it loaded in your head, you can just say, this is the next buy. This is the next one. This one looks good coming up. I'll buy that next. And it keeps you kind of on your game of where you should be deploying money next. And it doesn't mean you'll be 100% right, because all you can do is just try your best. I won't be right. I might only be right 60% of the time on the short term, or maybe even less. It depends how good of a technical analysis person you are. The big long-term charts are very reliable. And if you can stack these big long-term charts all up next to each other, they paint a picture. And that picture is what you should be kind of painting in your head, where it's like, it basically what it does is it provides a vision for you under your investments. So if you got these pictures that you've developed from your technical analysis, and then you follow it up with the ratios, that's another validation point of basically saying the value's good compared to history. These are the areas that I need to be looking in. Do the technicals match what I'm seeing in the risk reward of the ratios? If the answer is yes, then you start looking at market conditions. Does the market conditions support these ratios to rotate or change? And if you see the technicals and those ratios start to change, then you're like, and you're seeing these patterns that are developing for bottoming patterns. You're seeing the volume kick up. You're seeing all these things. Your probability of success goes up dramatically. And once you kind of ride through one of those, you just need like one time. The problem is these things don't happen very often. And if the up move is 5 to 10 years, and let's say you're only, and there's a 5 to 10 year decline. So if it's 10 years up, 10 years down, that's a 20-year period. Maybe your investing period's only, 50 years, 40 years. You might only see a couple of these in your lifetime, maybe 3 at most. So you kind of have to get it right after the first one. Otherwise, you don't see it again. And the gains are so large that you only need to ride a couple of these. It's what one thing I kind of want to get across, and this isn't about the necessary question, but timing is, the gains can be so large if you can find all the undervalued sectors with these huge asymmetric bets, and you ride a couple of these, and you're right. Let's say you've got 5 possibilities, and you ride 3 of them that are just absolute killers. You've made so much money, it doesn't matter about the other 2 sectors. And if you get 100 bagger, and you've got a couple grand in it, I mean, you just transformed your entire portfolio off one position. And if you got a couple positions that return 50 times your money or 20 times your money or 10 times your money or whatever it is, it transforms your portfolio so much that the other sectors don't matter. So you've got this betting strategy kind of tied into all this as well. And if you get everything kind of lined up and you get the betting strategy right, you get your portfolio set up correctly, the money will come. Now, I'm gonna tell you this: the money will not go to the undeserving. The money will not go to the person who doesn't understand what I'm teaching on the channel. You can lay out 100 baggers in front of people, a whole bunch. You could put 300 baggers in a person's portfolio. And you know what they're going to do? They're going to sell it after a 2x or 3x or 5x or 10x gain. They won't ride the whole 100x. They don't know when to buy, when to sell. They don't know what the valuations and the ratios are. So a lot of this deals with the person and their temperament and their ability to hold on. Now, here's a question that I would ask you. Let's say you developed a portfolio. You've got this really nice looking portfolio. It looks fantastic. And I'm just going to say in 10 years that you knew that one of those companies was 100 times your money, 100 bagger. But you didn't know which company it was in your portfolio. What would you do over the next 10 years? And you have options. Like what would you do today if you knew that? Would you sell any of your companies that were in your portfolio if you knew one of them was a 100 bagger but you didn't know which one? I can tell you what I would do. If I knew that, I would add money to all of them. That's what I would do. I'd cost average in and just continue to add across the sector. I would add into the weakest ones and I'd add into the strongest ones. And if you watch my updates, you'll see what I do is I've got companies that are out there. And I've got a whole bunch. Some have performed incredibly well. Some are lagging. And you know what I do? I add in, if I get signals and I think they look good, I add into all of them a little bit continually. If that looks good and it looks like it's bottoming, I'll add into it. The strong one pulled back, it looks good, I'll add into it. So I don't add into all my losers and I don't add into all my winners. I add into all of them. I think I could potentially have a couple 100 baggers in my portfolio over this entire bull market. So what am I going to do? I'm not going to sell until the ratios and the values get expensive or until the market conditions change. There's no reason for me to sell. If something's cheap and I think the opportunities are still incredibly good, I continue to hold. Now, the only way that I would reduce a position or put it into a free ride or do something is if I find another opportunity that is better than what I currently hold. And that's the only time I would really sell something. And I do own some mutual funds. I do own some ETFs. I do own things that are not going to return 100 times my money, but they do stabilize a portfolio some. And I do own some dividend paying ones. I own some royalty companies. I own a bunch of a wide variety of things. So you don't have to go all in on all of the risky things. And if there's an opportunity where you can get a lot of money with low risk, then you know what? Maybe that's the spot you need to be. This is going to take time. People don't get rich overnight. I think cryptos have had incredible gains. And I think a lot of those people got lucky who made a lot of money. And I don't know if it's going to continue to last. I mean, that's just kind of my opinion there. I don't think it's going to go up nearly what it has in the past. I think it's really going to slow down, and who knows where it's going to end up. Maybe it does continue to go way higher. I don't know. Maybe it has another 10x in it. Maybe. But going back to the original question, I'm going to say that I'm not as concerned about the timing personally. I'm looking for the risk reward, and if it's going to happen in my time, in my life, or in the next 5 years, anything less than 5 years, if I can pick up assets that are dirt cheap and I see what could potentially be a good market market balance, which is a deficit out in a somewhat of a near term, I'm going to continue to cost average in. And hopefully me diversifying out across what I think are the cheapest assets in the world. And if the charts look pretty good, like they're breaking patterns, like platinum's broken a pattern to the upside. Oil, when I bought it, did. So did uranium. Copper it's in its first leg. It looks like it's going to continue to go higher. Rare earth metals. I'm spreading out, and these are things that I think have market deficits. I'm in everything. And if something's lagging, like my gold and silver investments are lagging, my other ones are pulling me forward. And if those start to lag and gold and silver takes off, well, then that's pulling me forward. It stabilizes the volatility of the portfolio. But remember, I've been investing for some time, and this volatility doesn't bother me as much. Other people, it may bother them differently, and their temperament and their personality may be a little bit different than mine. So I understand that. And they may need a little bit less volatility. What most people do is they go directly to what I would consider to be kind of the highest risk, and their reward may or may not be there. The juice may not be worth the risk, if that makes sense. So I think they're taking on too much risk and not putting enough money into things that will progressively move them forward. Another thing is they like to chase price and performance. It's very common of new investors, and what I do is I just buy whatever's down, and I'll kind of mix it around. I'm fine with buying something that's going to lag for a little bit, potentially, but it might not. No one knows the future. No one. I don't know the future. These guys that you watch, they don't know the future. You're not necessarily going to get the edge that I think most people think. What you're going to get is if you can chase value, and you know what's cheap historically, and you stick with all these undervalued sectors, you're going to catch 1 or 2 or 3 or 4, and you're going to get this huge ride, and that's all you need. You don't have to be right on everything. You have to be right on, and you have to be right big, and you have to be able to be disciplined enough and seasoned enough to hold onto it long enough to change your portfolio. And I'll be honest here. Even if you make a ton of money, what most people don't realize is that we are already living a ridiculously rich lifestyle. Myself and probably anyone who's on this internet, they are far wealthier than what people were a few hundred years ago. We are living better than kings. So we already have the life that I think a lot of people want. What I'm going after is just independence and freedom. That's what I have left, and that's what I'm going after. I want to be able to do whatever I want with my time. And maybe that's what you guys are doing. Obviously put it in the comment section what you guys are investing for. That's something I'm definitely interested in. But I'm going after independence. I don't want to be told or controlled by anything. And I would love to sleep in and wake up whenever I want and do what I want when I want to do it. That would be probably the ultimate thing. Now, buying a more expensive car, I'm not really doing it for that. In all honesty, guys, like I'll describe my personality and my kind of myself here, and maybe it makes me a better investor. I don't know. I don't have that pressure. I don't have that internal drive for like materialistic items. I like cars, but they don't have to be expensive. I like fixing bad things and making them good again. That's the engineer in me. I want to rag out the value that some of these old cars have. And I'll be honest, the best car I've driven, the one that I really, really like, is a Mazda RX-8. Like, that car is ridiculously a ridiculously good value for what it is. I own the first car I've ever purchased brand new. I purchased it back in my early 20s, and I still drive it. It's a cheap little economy car. I still drive my wife's first car that she purchased in 2004. I bought mine in 2005. We bought them both brand new. Mine was super cheap. It was like $7,500. It had slight hail damage. They discounted it massively, and I bought it for very cheap. and I still drive it just because it still works and I know how to fix it. It's 160 something thousand miles on it. Just keeps going and going and going. Um, so what I do, I used to work out a ton. I work out at home still. I've maintained that habit since 19 years old, 18, 19 years old. Actually more like 17 or 16 years old. I haven't really skipped much from 40. That's 30. No, it's about 20 years. 20 years. I haven't really skipped too much workouts. So what I am, I'm very disciplined. I continue to go and do things that I think are a huge benefit to me. So my health, I stay on track. I continue to do things. I stick with things that work. I stick with things irrespective of labels, irrespective of what people think. I drive model cars that people call unreliable, and I have no problems with the reliability of it. I stick with the maintenance. I stick with my diet. I stick with a consistency of everything in my life. And when I go through investments, and I think this is probably a function of, I don't know if it's a function of a personality trait or IQ, or I don't know what it is necessarily. Maybe it's a combination of all things, is I just continue to progress forward my life in the direction I want it to go in. And if it doesn't provide value in my life, I don't go after it. So if I buy another different car, is it going to make my life better? If the answer is no, I'm not going to do it. If I go and pursue something that isn't going to make my life better, I'm not going to do it. And what you're going to find out over time is that the money's not even that important. It's your time that is. And what you're doing with your time. So that's really what the value is. And if I can buy more of my time, I mean, that's really what I figured to be the most valuable thing to me. And obviously, certain things are different to people who are watching this channel. And that's fine. You guys can go after whatever dreams and aspirations that you guys have. But that's what drives me. And if I'm in investments, and if you can kind of look at what I do in my life, being able to work out and staying to schedule and being stuck to a strategy or a plan, not really varying. I like stability. It's the same thing that I do with my investments. If something is really cheap, why would I sell out of it? I know that this is of good value, and if you have a mindset that really keeps you kind of locked in, you're like, oh, it'll develop. It needs time. It's kind of like developing something that you see a ton of potential in. Someone who's got great potential in becoming a baseball player or something like that, and you develop and develop and develop and refine, and eventually they may have a shot if they have the base kind of the base to athletic ability to do it. So it's the same thing that I see in stocks with value and the market conditions. If things are changing and if it takes another year or two, it's okay. I'll continue to add into it. I'll cost average in, and I'm usually pretty good at seeing some of this stuff. And what happens with most people is they'll get so short-sighted because I'm looking at big picture view things that something may not turn out their way in 4 or 5 or 6 months. They'll say it's bad and then they'll leave. But the value is still there. And that's what I focus on, is the value. And my discipline and my, I guess, personality trait, I just stick with it. And eventually it pans out very well, usually. All right, I'll end it there. If you guys like this analysis or this talk, give me a thumbs up. Subscribe to the channel if you haven't. And thank you for listening. This is Finding Value.